Hello, this is Gordon De Silva, and we're going to be talking about how to claim as much tax uh, back or reduce your tax bill on buy to let properties. This is not on residential, personal private residences, it's on buy to let residential or commercial properties. My name is Gordon De Silva. I am a chartered accountant. I have 45 properties of my own, so I really do understand property. And I'm also a business expert and a tax expert, so I understand, you know, property as a business, and I understand tax on property. So we've put this together to help you understand it. Now, this is being recorded at the beginning of 2016. There are some important changes coming down the line on rental properties, so watch our blog, subscribe to our videos, keep subscribe to our emails, and you will be kept up to date with any property matters that change with regard to legislation. So let's get started on this. We have repairs to let property, as I said, and it's again commercial or residential property. So the first thing we want to look at is whether it's a new acquisition. Now, a new acquisition will be something that you've either just bought or it's a property you lived in that you're now going to let. So that would be a new acquisition to your buy to let portfolio, if you like. Now, I suspect if you've just lived in it, the first question can be answered. But the question is, before letting it, can it be let? Now, if it's a property you've lived in, like I said, of course you can let it because you've been living in it. I suspect it's got a functional bathroom and heating, and windows aren't smashed and all that sort of stuff. So that's okay. And so if you can let it, then you got to ask another question, and the question is it capital? Now, a capital expense in broad terms is an expense that enhances the value of a property. It's of a structural nature. So it'll be things like putting a conservatory in, or putting an extension or a loft extension, or knocking down some walls and moving kitchens, moving bathrooms, putting a new bathroom in. These are all of a structural nature, and as such, they usually will enhance the value of a property, and as such are capital in nature. And if they are capital in nature, you cannot offset them against your rental income. They will be captured, of course, and if we're your accountant, we'll ask to capture that and build it into your portfolio as an additional cost to that property. When you come to sell it, you will reduce the tax on it, and the tax reduction will be based on how much you bought the property for, all the acquisition costs, less any, and you sort of add, of course, the any enhancement costs you've done on building the extension or conservatory or whatever, and you'll also add your selling costs, estate agents fees and that sort of stuff, and you'll take that total cost away from the selling price. That will give you a profit on selling your property, which will be liable to capital gains tax rules, which I will not go through here now. If it is not capital, so it can be let immediately on buying it or on getting it ready to let, and it is not of a capital nature. It's sort of repainting, doing a bit of sprucing up, maybe keeping the place in a better condition, so maybe replacing a carpet so it looks more lettable. Those expenses are treated as if they're incurred on the first day of letting and are deductible for tax. Now, please do not expect this to go through without a challenge. They may be challenged, and some of them are gray areas, right? So the revenue may say, well, these are, they couldn't be let without this carpet being replaced, and hence it's of a capital nature. We would have to argue the opposite. Now, we can't guarantee the outcome of that argument, albeit that we do fight hard. We don't give up easily. But as long as you're covered for investigation insurance, or you're willing to pay for that, the time spent negotiating on this, where we find the outcome, like I said, is not a 100% guaranteed, depending on the size of the investment on the repair. So if your investment is like £300 or £400, then chances are it's going to be okay. If it's 3 to 10,000 pounds, it may not be okay, and so on. So it's all relative. Now, what if you buy the property and it cannot be let when you buy it? So it's a derelict property. It's in a bad state. There are some properties that have outside conveniences, if you like. They're properties where they don't have central heating. These properties could not be let. And any then enhancement you make, so to replace windows for double glazing, to replace a non-existent kitchen, replace flooring, repair the roof, all of those sort of things will not be deductible for uh, income against your rental income, but again will be captured against the future value of your um, property, so that when you sell it in years to come, you will not pay tax on that enhancement. So let's look at repairs. It's much more simple now when we look to an existing property that you've already been letting out, and you're doing the repairs either during or after a letting or between lettings. Then the question still remains: is it capital? We've discussed that. If it's capital, are you putting an extension in, or a loft extension, or a conservatory, or knocking down some walls? If it's capital and it's going to enhance the value of the property, then you're not allowed to deduct it from your rental income. It'll be captured. Again, a good accountant will capture this within your portfolio, so that when you come to sell it, all the expenses you spent over the last 3, 10, 20, 30 years are all captured and available for you for deduction against future selling, to reduce your tax when you come to sell it in the future. If it's not of a capital nature, then of course, no question about it, you can just deduct it. Whether it's repairing carpets, replacing windows, putting a new kitchen in, replacing a boiler, putting new radiators in, replacing old radiators, that sort of thing, plumbing work, electrical work. All of those things will be deductible for tax. So I'm hoping that gives you a good understanding. So when you submit information to us, and there's a lot of repair costs in, so let's say above £1,000. What you want to be thinking about is, where does it fall in? Is it capital, or is it deductible against rent? Give us some information. Tell us what it is, or arrange a call with us, because it's better we discuss it to make sure we understand the risks and rewards to you for arguing either side of the case, and make the best case possible for you. As I said, my name is Gordon De Silva, gordonsknight.co.uk. Information is on your screen right now. If you need any help, please give us a call. If you're a new client, talk to us. We'll explain how we work and why we're good for your business. If you are already a client, then of course just arrange to speak to us if you've got any questions on the content of this FAQ. Thanks very much for listening. All the best. Give us some feedback, would you? Be really good of you. Thanks. Goodbye.